I sold Palo Alto Networks this morning. I had only held it for about 2 weeks. I was up about 13% on it. But I'm doing some work, if you've seen some of my earlier videos, on the effects that debt service is going to have on these corporations and how it will come directly to their bottom line and affect their profits. And thus they won't reach some of the projected profits that they had come out with in their earlier earnings calls. And as I'll show you, Palo Alto had come up with some phenomenal projections of what they were going to earn in the future. They just turned profitable in 2023. They had been showing a loss up until then, and then they're showing 13 to 18 to 22% growth in profits. But when I did the analysis and said, yeah, but they aren't accounting for the increase in debt service and they have some substantial debt, I decided I needed to sell it today. So I think there's a good lesson to be learned here, and I want to walk you through the analysis that I did and the whole process of the buy and then the sell so that you can become a better investor. This is not financial advice. I'm just trying to teach you what I've learned over the years as to how to analyze a stock, and then I want to bring in the technical analysis and show you the chart and why that confirmed I needed to sell today.
Best of Us Investors presents Kerry Griegmeyer.
So why did I buy Palo Alto Networks in the first place? Well, they're a cybersecurity company. They're relatively new. They're on top of it. And I determined from my visit to Seeking Alpha, they were up year to date, or the last year, 51%, year to date up 78%. So somebody liked them. So then what I did was I went and came down here on Seeking Alpha. I found the earnings call that they did back on August the 18th, and I listened to it, and I thought, these guys are on top of it, and this is a company I want to be a part of. So then what I did was go to their earnings, and because they, in their earnings call, they projected some strong earnings, and so I looked at their earnings estimates, and you can see here their anticipated earnings per share. They're anticipating to grow at 20%, 19%, 22%, 37%. So this is the movement as we move deeper into artificial intelligence, and I said, this is something I want to own. So then I went and looked at their revenue estimates, and they're supported by the earnings estimates that they're going to grow their revenues. They're projecting by 18, 17, 20, 15%. And so this is why I bought Palo Alto. So then the question comes, why did you sell it? So this is the analysis work that I do on all of the stocks in the BUS 12 and BUS 13 portfolio. And there's a video here that explains how this whole chart works. But let's focus on Palo Alto. Current price of 250, and that actually updates on a every 10-minute basis. Their revenues of $6.8 billion in 2023, their earnings of $439 million in 2023. They have a current debt of $2.2 billion. If we figure their interest on it, and this is actually what they pay in interest from where I'll show you where I get the data, they paid $27 million in debt service. Now, if that debt has to be refinanced from 3% to 9% or 10%, it's going to more than double. So I'm calculating that will give them a debt service of $227 million, which will affect their earnings by 83%. And again, we look across here, or their earnings will drop from 439 million to 239 million, or an 83% decrease. I then show you their price to sales ratio, their current ratio, their debt to equity ratio, and their interest ratio. They do okay on their interest coverage ratio and their debt to equity, but what these numbers aren't figuring in is this increase in the cost of debt service. Where do I get this information? I look at their income statement, and you can see that Palo Alto has done quite well. They were losing money hand over fist up until this year, and then they've got their act together and they're doing quite well. And they had been showing a loss. They're showing an increase. They were showing a loss in earnings per share. They're now showing a positive earnings per share. All good information, but does not take into account their debt service. And so we look at the balance sheet, and we see they have a short-term debt, which is down, but it's still just about $2 billion. They have a total debt of $2.27 billion. They have a net debt of $1.13. What does that mean? That means if they take all their assets and put them against their debt, they're still going to have $1.13 billion of debt. That is then going to be the cost of that debt, as I showed you, is going to be recalculated as they have to refinance it, and that will then create this 83% impact on their earnings. That's why I sold Palo Alto. Now, let me show you how I then confirmed that through technical analysis. This is the chart that I have created on TradingViews on Palo Alto, and you can see they have reached their level of resistance. They've bounced off of it 1, 2, 3, 4 times. And as Palo Alto refinances their debt, they're going to have to report that in their earnings statements, and I am suspecting that Palo Alto will come down and closer to its 200-day moving average, which would be somewhere around $200 a share. So that's why I sold Palo Alto today. You add to that the conflict now going on in Israel, the conflict going on in Ukraine. There is a geopolitical fight for reestablishing who the superpower is, and it's not going to go away. I suspect that Israel is going to go after these invaders, much as we went after the invaders after the Twin Towers terrorism. So we have some very unstable times in front of us. So you must consider that when you invest in a portfolio. I have I'm up to almost 70% cash at this point. I'm holding some key holdings that I think can weather through this situation. I have some buy orders in on stocks like Google, SMCI, and Microsoft because I want to strengthen those positions because I think they can endure some of the pain that the market is going to suffer in these unstable times. You then add to that we are going to enter into the biggest change in our world since the beginning of our world as a result of the collection of data over the last 40 years, the implementation of artificial intelligence, and then machine learning. And this world's going to change. But we got some tough times to get through that I believe are going to present me with some tremendous buying opportunities. And I'm trying to share that with you on my website. And I'm using graphs and the trading views to measure current momentum. And then I'm using financial analysis like I just showed you on Palo Alto to help me make a better investment decision. I want to share that with you. I'm going to do it on the website. You can come and join our platinum level. Here is where you go to the website. You find this box. You check it for the $60 a month, and we'll work together to make better investment decisions in these very confusing times that are in front of us. I'm Kerry Grinkmeyer. I'm a retired financial advisor, and I'd like to help you make better decisions. And in order to do that, I encourage you to get on the bus.